Hello, my name is Michael Glass from eMediaTradingCoach.com, and our disclosures for today are any symbols that we use today should not be inferred as a trading recommendation. No matter what investment vehicle you choose, stock, forex, futures, options, they all entail a amount of risk, including you could lose your money. You have to determine whether or not that is appropriate for who you are as a trader. Any backtesting replaying you do is just to evaluate and show you a particular strategy. Future results are not guaranteed, and any investment decision you make is solely your own responsibility. Trade at your own risk. So we have been talking with you guys for 5 videos about how to develop a high probability trading setup. We started off with do you know what time it is, where we focused in on the type of day. Is it a ranging day? Is it a expanding day? Is it a trending day? Is it a consolidating day? Knowing the type of day helps filter out the types of trading setups that you should be looking for. And also understanding the time of day. There are times that you shouldn't be trading because of volume, because of volatility. So do you know what time it is was the first aspect of identifying what trading setup you should use. And then we got into technical speaking and we talked about our technical indicators, technical analysis. And what we wanted to do, how we ended that video, was really talking about categories of indicators and how you should divide them up into these indicators. Which indicator are you going to use to help you determine overbought and oversold? What indicators are you going to use to help you identify market sentiment, the trend? Which indicators are you going to use to help you with support and resistance? So if you put it in those categories and only find one, maybe two per category, you can avoid that analysis paralysis of having so many that are conflicting, telling you different things. In chart patterns or us, we focus in on price action. Remember, price action is the immediate instant indicator, instant story of how the market feels right now. Technical indicators are lagging. They're mathematical calculations on price. So chart patterns show us what's going on right now. And we talked about there that there's chart patterns formed based upon the different types of candles, and there's chart patterns formed more based upon trend lines and support and resistance levels, and how I'm more of a trader who likes to follow those trend line type chart patterns versus a doji Marabuzu, the falling threes. I prefer head and shoulders and double toss instead. Then we talked about risk management, money management, stop in the name of money, and how important it is to live to trade another day, to preserve your capital, to cut your losses and let your winners run. So knowing where you want to place your stop, and again, it's so personal, it's so individual. Your risk tolerance is different than mine. Mine is different than theirs. So how much risk you're willing to take on each trade and how much you want to allocate to each trade is really individual to each trader, which when we talk about the minutes fitness trader is what it's all about. You first have to define who you are as a trader and then find trading setups that match that so that you'll then feel confident and have the psychological capital to pull the trigger on those trades. When you're trading somebody else's system, when you're trading someone else's indicator, that's when and you're in a trading room and the buzzer goes off. That's why you don't take all the trades, because it's not you. You're trading somebody else. And if you take a loss or something's going on, you suddenly you're only taking the trades that lose. You didn't take the winners because you didn't have the capital, because it's not your style of trading. So I told you in the last video that Minnows Fitness Traders that we have a bonus for you, and we want to go ahead and walk you through one of my favorite high probability trading setups. So we've entitled this video, "May the Force Be With You." So, sometimes traders often feel like there's this outer influence on the market that affects their trading. We know that anything can happen. So how is it that we as traders can level the playing field, define our edge, our setup, so that we know that over time our expectancy will be to make money? We're not going to beat our bidder every time, but we know that over time we can win at the market because we've leveled the playing field, defined our edge, and our expectancy is positive because we've tested it over time. So what we find is that many traders in search for the holy grail focus in on knowledge, and that acquiring more knowledge is how they're going to get there. But what they find is that their system, their trading results never change. They keep trying to go and find new indicators, new systems, new gurus to follow to try to get them to where they are right now to where they want to be. But those things are important and you should incorporate them into your trading. But what's really going to make you what you need to be is work. It's not about something new, it's about refining what you already know. We all know that the definition of insanity is doing the same thing over and over again and expecting a different result. Yet this is what so many traders do. They get on Google looking for new indicators, looking for new gurus, expecting to see a different trading result. But they have not defined who they are as a trader. They haven't defined who they want to be as a trader. They're looking for someone else's definition instead of trying to define their own definition. But here's the problem. Even when you do find that new indicator, even when you do find that new trading setup and it doesn't work for you, what exactly have you done to change your perception? What have you done to make sure that you make a better decision next time? What have you done besides say, I'll do better next time? Again, you can look for all the indicators that you want, and you can even know all the high probability trading setups. It's a whole different battle. It's a whole different skill set to actually pull the trigger on the trade. If it was simple as knowing a breakout trade or a pullback trade, if it was as simple as knowing the trade setup, everybody would be rich. But we know that emotions and focus and discipline have so much more to do with the actual results of your trading. So let's talk about that. In Trade Your Way to Financial Freedom, Dr. Menthar talks about these 7 components to a trading system. Many people focus on the first one, a setup, a high probability trading setup, and they define that as their system, but there's so much more that goes into your system. Again, if it was just knowing by key price level breakouts, the setup, then everybody will be rich. But we know there's other components. How are you going to enter those trades? Once you see the setup is the criteria, it is the system, the points that have to happen that triggers an action. That action is your entry. Are you going to buy the pullback? Are you going to go in with a buy stop or a sell stop? Are you going to anticipate? We all know that's bad. And then how are you going to protect your capital? How are you going to preserve your money? Where is your loss? How are you going to get out? Some people get so confused or excited they're actually making money that they actually forget to lock in profits, and it goes all the way back down to break even, or it goes all the way back and they get stopped out instead of locking in some profits. Understanding the cost, your opportunity cost, which is if you take 3 small profits, 1 big loss wipes it all off. So you have to understand, again, how to lock in your profits and to preserve your capital. Position sizing plays into all of this. Position size ties greatly into your entry. Are you going all in on the first one, or are you going to scale in? And then finally, another component to your trading system should be your toolbox. Your charting platform, your subscriptions, your training, your coaching to help you become more focused and disciplined. All this is important. It's not just about the setup that will make you a profitable trader in the end. So let's get right to it, to our first high probability trading setup as a part of our training. And this is my favorite. It is the 30-minute breakout strategy. What is that setup? Well, as the market opens, you want to mark the price levels of the high and low of the first 30 minutes. In our little picture here, you can see the green line, that's marking the high price, and the red line, that's marking the low price. You want to be aware of what that price level is at 30 minutes. Now, I want you to also know that some people do this as a 15-minute breakout strategy. They do this instead of 30 minutes, they do 15 minutes. Some people do a 60-minute trader. So you need to define, how you want to do this. I guess there might be some 25 minutes. I know there's some 5 minutes people also who, whatever the direction is in the first 5 minutes, they trade that also. So it's still just a breakout strategy based upon a time frame. You can back test this and trade this to determine which time frame you like the best. I like 30 minutes the best. You have 2 ways to enter this trade. You can go with buy and sell stops, meaning as soon as it breaks through that price level, you have a stop up there to initiate the trade. We talked about this. or you can allow it to go past your price level, and once it pulls back or reverses back to that price level, now you enter the trade. Both are very valid ones. In my example, we're going to go with the buy stop or a sell stop. We're going to pull up the charts in a second, but you need to back test. You know that we always recommend stock reflex to help you train. So you need to go back and back test it and see what would have happened if I did a buy stop and sell stop. Write down the expectancy, write down the probabilities. What would have happened if I waited for a pullback? Would you miss a trade? Would have kept you out of a bad trade? You need to go back, and then you have to determine which style fits who you are as a trader. Stops. I've seen some people do 3/4, a point, 2 points. I think somewhere in the middle is fine. A point and a half. You don't want to do a point because I think everybody's aware, and what I like about the ES, that everybody's aware of these price levels, and you don't want someone who's just going to come back. You don't want the market to reverse back a point, just so that they can stop you out and move back. So I like to have a little bit more than a point. But again, just like you have to back test the entry, you need to back test the stop and see which ones you would have stayed in and which one you would have been stopped out of. Your target is going to be a point. Your target is going to be a point. And position sizing, again, that's going to be dependent on entry. Maybe you do one contract on a stop and you do one contract on a pullback. You combine both of those entry methods. Maybe you do all in on a buy stop, all in on a pullback. Again, I'm not, until I talk to you individually, I can't tell you what to do because I need to know more about who you are as a trader. So I'm giving you some general rules. So let's go ahead and pull some charts and take a look at this 30-minute breakout strategy. Okay, so we are at about 9:54. Well, actually 9:58, and we're going to go ahead and mark our price levels. Now, in my platform, I have it study to where it already draws a cloud to identify what's the 30-minute low. Well, it's 184.50. What's our 30-minute high? It's going to be around 1190. So it's going to automatically draw the lines for me. So, it's just a nice visual. I have some other indicators on here. This is developed by ThinkScriptor. There it is. So you see it automatically plotted the low for me of the 30-minute price range and also the high of the 30-minute price range. You can also notice that our 15-minute low was here, and you would have been triggered into the trade, and it was going back. So you can see one difference between the 30-minute and the 15-minute trade. And also, let's go in real quick. Let's go over here. Our low is 84.50. We talked about two types of entry styles. I'm going to go with the stop. So I'm going to put in a sell stop order in at 84.25. And our high was 90. So I'm going to rise on up here and put in a buy stop. I think it's important to put both in. You can't forget that they're in, but I think it's important to put both in because you might forget to put it in later. But you do have to remember these stops. You do have to remember to do a cancel all, especially when one's triggered. You can do a contingency type order if one's triggered, cancel the other. So I'm going to go ahead and put that in. There we go. So we have a sell stop here with a trailing stop, and we have a buy stop here with a trailing stop. And one of the reasons, as I talked about, your 15-minute trade price level would have been stopped out basically, depending on your stop. But let's say you got here at 84.50, it already went up to 87, so that's 2.5 points. More than likely, you would have been stopped. Maybe you hit your stop up here behind the high today. I don't know. That's a big stop. But what's happening at 10 o'clock? What's going to help us? What's a catalyst? Well, 10 o'clock, we normally have what? Economic events. Philly Fed, Michigan sentiment, industrial production, some economic event, calendar event usually happens around 10 o'clock, 9:55. So that's going to be a catalyst that may help us in our odds of our 30-minute breakout trade. We want to make sure, again, that we're aware where our stops are. We want to make sure we understand the context of the day. But a catalyst that's going to help us with our 30-minute trade could be economic news. So what I'm going to do is go ahead and pause the video and bring you guys back when one of our trades are ordered. I will say this before I pause. This does not mean that you're not trading throughout the day. This is just one trading setup, the 30-minute breakout. You may be trading these swing lows, swing highs. Matter of fact, a swing high just was triggered here. Um, I'm not saying this is the only trade you do, but this is one trading setup that has a nice high probability, around 70-80%. News typically helps it out to get it up to that 80%. But you should also be, if you have the psychological capital in the system, to go ahead and trade. As a matter of fact, you can see that our trading this swing high, basically 87, basically already just got you a point. Let's go ahead and pause the video. Okay, so it's about 10:30. It hasn't happened yet, but that's fine. That's why that's why I prefer to use stops, so you can remember to put these in. That's why I like to have this cloud that draws the price level, so that it's always something that's being brought to my mind, just in case I forget. So I still have our sell stop in at 84.25, our buy stop still in, and you can see, as you know, during that half hour, there's other trades that are going on. Of course, you can contact us and we can talk to you about these swing low, swing high trading strategy. We were just filled on that sell stop, 84.25, and just as a proof of concept, we talked about getting a 1 point on this trade. I'm going to take off my trailing stop, and I'm going to go ahead on down to 83.25 and enter in an order to close out the trade. So put that in, and you can see we were filled because we went right on through that 83.25 level. So 84.25 down to 84.75, 30-minute breakout trade, high probability trade. And again, you have the catalyst of potential economic news events going on between that. And again, on the ES, what's great about it is that everybody sees the trade, and so those people are also putting momentum behind the trade. So once again, here are the rules to the trade. We want to mark the high and low price of a certain time frame. In this instance, it's 30 minutes. You can use a buy stop or a sell stop or a pullback to get into the trade. Identify your stop at 1.5, and your target is 1 point. So this basically concludes our video on becoming a high probability trader and defining our first high probability trading setup. Being a high probability trader is all about leveling the playing field, so you understand when you should and should not be in a trade, putting the trades in our favor by knowing the times of day to place our trades, knowing the setups that work based upon that time of day, and also recognizing the chart patterns and our indicators confirming that it's the opportunity time to trade. And they also help us distinguish between low risk and high risk trades, understanding whether or not we're trading with the trend, which is what the majority of high probability traders do, or you're doing counter trade. Nothing wrong with it, but you need to know that so that you're using the right position size, you're using the right targets based upon the type of day, the trend of the market, and whether or not it's a high or a low risk trade. I've said this throughout the whole video. You've got to train your mind. You got to back test and prepare the trades. That way, you're able to handle the situation as it develops during the market live, because you've seen it before when you practice it before or after the market close. So our resources, we have plenty of videos on YouTube, Facebook, and Twitter. We got a new fan page up on Facebook that we're putting out there so you guys can be up to date on what's going on in M&E Trading Coach. And this whole free 5-part video and this bonus video was all about showing you what you'll find in the E-mini Trading Coach instructional video curriculum. It's broken down into 3 areas: the basics of trading, where we go into deeps about chart patterns, technical indicators, psychology of trading, money management. We go into all of that in the basics. And then we go into the second one, we talk about the components of trade. We talk about trading the direction of the market. We talk about ideal locations to get in the market. We talk about triggers, and we talk about how to manage the trade once we get in there. And then we have a third video where we get into, again, the trading setups, how market internals and your routines and habits will make sure that you're successful using those trading setups. Once you've gotten the setups down, as we said, if it was just about a setup, everybody would be rich. But we also have our mentor program where we will work with you and tweak all of these setups so that they match who you are as a trader, so that you have that confidence and that psychological capital to be in that trade, to pull the trigger and be in that trade. You know about global futures, 20 free contracts, intraday main margin, low as $300, and they've got all the platforms. And we said over again, you've got to train your mind. Pressure's having to deal with something you haven't prepared for. If you prepare as hard as you do before the market opens or after market closes, as you do while the market is open, you will be a high probability trader. Our slogan is it doesn't make a difference about that new trading system, about that new indicator, getting into a new trading room, or being able to recognize that high probability trading setup. If it's the end of the day, you don't pull the trigger. So you've got to level the playing field. You got to understand how to be a high probability trader, and then you have to have the psychological will to pull the trigger, to enter the trades, and get out at the right spot so that you can live the trade another day. Cut your losses, let your winners run. So I hope that this series has been a benefit to you. I hope that you've learned something. You've learned a little bit who you are as a trader, a little bit of how to tell the story of the day and build context so that you're taking high probability trades, low risk trades. And I hope that, if you remember the movie The Matrix, in the beginning, The Matrix was just these numbers coming down. This is the first movie. But by the end, Neo was actually able to see, Mr. Anderson and the agents. And so being a high probability trader is about taking that market flow, that's the stream of data, and to begin to recognize Mr. Anderson, to begin to recognize the patterns and to see the setups happening, and it's slowing down, and that you're able to see it, you're able to perceive it, you're able to make a decision based upon your psychological capital and pull the trigger. Thanks, guys, and I'll see you next time.